Let's shift our focus back. We'll talk about banks. Banks are in focus as the stage is all set for MPC outcome tomorrow. Harsh is joining now with us to tell us what Nomura is expecting. Well, it is expecting RBI to deliver rate cuts of 25 basis points. And what does this mean for the markets, Harsh?
Well, let's talk, of course, about what Nomura is saying, 25 basis point rate cut on the repo and what that will mean on certain stocks. Citi has broken that down for us. But first off, I want to focus on CRR because the cash reserve ratio is going to hold the key with regard to liquidity push within the system. And, you know, as per Citi, essentially, a CRR cut would entail at least some amount of support when it comes to margins for some of the banks. It's positive for banks with a lower LCR, which is a liquidity coverage ratio, and a higher LDR, which is loan to deposit ratio. So you'll have some of those banks benefit a little bit more than others. Let's pull up some banks where CRR is concerned, which will aid numbers. First off, the top three on the list are all PSUs, and that's likely also why we've seen that move on the PSU counters, PSU banking counters. PNB, SBI, BOB. Any move on the CRR 50 basis points or more could well benefit some of these banks by 1 to 2% with regard to where their operating profit is concerned. So operating profit could see a jump of at least 1 to 2%. This is, of course, starting Q4 if it were to happen in this meeting, which is in December, because it will start to impact the numbers only post the operating or operationally reducing the CRR. So that's one. On the private banking side, Federal Bank, HDFC Bank, Axis Bank could be the three key beneficiaries in case of a CRR cut. And anything between 0.8 to 1.2% is what your operating profit would spike by as a result of a 50 basis point cut. Now, in terms of the repo, if the repo is cut by 50 basis points, you could see a mix of banks impacted, and here the impact will be adverse because you will start to see loan yields getting adjusted pretty much immediately. Bank of Baroda will be the first one impacted, 1.5% of net worth wiped off, 3.6% with regard to impact on net interest income. Federal Bank is the other one, 4.5% of NII as well as 1.3% of net worth. SBI, Axis, PNB and Kotak. So it's a mix of both private as well as public, and likely these are the banks which will get impacted.